Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we are looking at the fundamentals that are driving the markets currently. So Peter, has the pound recovered some ground?
As you have mentioned, the pound has recovered some ground. And actually it has gained some ground against the US dollar. It seems to have stabilized a bit, yet remains at pretty low levels. We have to note that definitely the most impressive drop of the pound was against the US dollar. However, on a macroeconomic level, we would also note the weakening of the pound against the euro. We have to note that Euro GBP has reached levels not seen for the past 2 years. And overall, the weakening of the pound could intensify, I would dare to say, inflationary pressures within the UK economy. It's characteristic that BOE Governor Bailey yesterday issued a statement where he mentioned that practically the bank has taken notice of the government's intentions about the capping of energy bills in the UK and its growth plan. At the same time, though, underscored its role in order to keep, or if you prefer, curb inflationary pressures and keep them at low levels. So more or less, we may see the bank proceeding with an oversized rate hike in the early November meeting. Currently, the market, specifically GBP Usd, seems to be pricing in the possibility of 125 basis points rate hike, and that's by 77%. On the other hand, we have to note that the governor's statement did not mention the possibility of a market intervention on behalf of the BOE to actually support the pound. So that's understandable in the sense that even should BOE intervene in the markets to support the pound, the actual root of the pound's weakening, which lies practically within the new UK government economic policies, seems to remain present. So any results of such a market intervention would be short-lived. On the other hand, I would be noting that we may see the whole crisis spilling over to the political scene. We have also Tory members of parliament, which seem to be, I wouldn't say furious, but still dissatisfied by Liz Truss, have withdrawn their trust to the new leader and now are openly discussing the possibility of a new leadership contest. So it's a big issue. It's a very complicated issue as we have a number of factors which come into play. Overall, though, the economic outlook for the UK tends to remain grim. And I would dare to say that we may see the pound retreating further in the future, in the coming days, should the fundamentals remain more or less unchanged. Mind you that we have a number of traders which are betting that cable may be reaching parallel level pretty soon.
We had some comments from the ECB President Lagarde yesterday, right?
Yes. ECB President Lagarde yesterday practically issued a clear warning towards the new Italian government. Practically, she stated that policy errors of member state governments will not be more or less corrected by the ECB. It's not its job. So that tended to imply that any fiscal widening may not be so tolerated, especially in Italy's regard, which there are extensive words that the new Italian government is more populistic. So that's one issue. The second issue, which was highlighted among her statements, was that the bank is to continue to hike rates. We may see the bank reducing the size of the hikes in the future meetings, but most probably it will continue to hike rates. That would mean practically that the interest rates and loans for European loan owners would be even higher and more costlier, so that would imply also a slowdown of economic activity further.
And how about the USD?
Well, there's a cautious sentiment in the market, which more or less tends to continue to provide support for the US dollar.
Okay.
On the other hand, though, we have to note here that the bullish movements of the US dollar, which we had seen in the past days, for the time being seem to be fading away. So on the one hand, we have a relative stabilization of the USD. On the other hand, though, we may see the cautiousness of the market keeping the USD at rather high levels, if not even push it a little bit higher.
And how about the US stock markets?
US stock markets continued to drop yesterday. At this point, I would note, though, that futures in today's European session were in the greens. So there seemed to be some rebound. On the other hand, though, the rebound was pretty weak on a daily basis. And in our opinion, that would be practically not changing the overall bearish sentiment for US stock markets. We continue to believe that US stock markets will perform pretty poorly and will continue to drop, given that the Fed is continuing to have a very, very hawkish stance, which we may see being reiterated by Fed policymaker statements in the coming days, today and in the coming days as well.
And are oil prices still dropping?
Yes, they are. There is a question mark here. To see the wider picture of the fundamentals for the oil market, we have to acknowledge that the tightening of monetary policies around the world is practically threatening the demand side of oil, as it may weaken economic activity in the coming months further. I would dare to say, though, that the only possible answer which could change the fundamental picture for oil would be for oil producers to reduce their oil output. And that's one question which was being placed practically by Iraqi oil minister, I think it was this morning, where he stated that OPEC is watching the developments vigorously about oil prices and is seeking market balance. More or less, that would imply two elements. The first would be that the market is out of balance, so OPEC, or at least the Iraqi oil minister, is considering oil prices to be too low. And the second element would be that practically we may see OPEC actually proceeding with production cuts, which may more or less reverse the market sentiment for oil prices and provide a boost.
And what's on the calendar for the day?
I would be concentrating mostly on the US. We have the durable goods orders growth rate is expected to show another contraction, and even a wider one on a month-to-month basis. And should that be the case, that would imply practically that US businesses lack the confidence to actually invest in the US economy. And that could weaken the dollar. On the other hand, though, we have the consumer confidence from the US, which is expected to rise slightly. Even slightly, though, that would provide some support for the USD. So we have some conflicting messages here. On the monetary front, we have a number of Fed policymakers speaking. For example, Bullard is expected to be more hawkish and could provide some support for the USD. Yet the main speech or the main statements today are considered to be Fed Chairman Powell's. And should he continue to be hawkish, we may see the US dollar getting some support. Now, about the Asian session, tomorrow we get BOJ's minutes. However, those may be passing under the radar. We have San Francisco Fed President Daly, which will be making some comments. I would be highlighting Australia's retail sales. Should the retail sales growth rate slowdown, we may see the Aussie slipping, and that would be practically on two reasons. The first reason would be that RBA has placed considerable weight on consumption in Australia about the size of its future rate hikes. And the second would be that a possible slowdown would imply that the average Australian consumer is less willing or able to actually spend more in the Australian economy.
Any final comments?
Yeah, more or less, I would expect the cautious sentiment of the market to ease a little bit, but most probably continue to reign over the moves and the directions in the markets, not only in the stock market, but also in the FX market, etc., etc. So, on the one hand, as the markets are digesting the news which are coming out in the headlines, we would expect an easing of the cautiousness. But once again, it's too soon for the cautious sentiment to actually be on the retreat.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So, welcome to the technical analysis part of the presentation today. In front of your screens, as usual, we make a start with the US dollar index. It's the 4-hour chart. And practically all the charts which are to be presented today are to be of the same time frame, unless otherwise stated. So, with no time to waste, let's have a look at the US dollar, which tends to imply that there are some signs of stabilization. Actually, the USD rose, yet corrected a little bit lower. It's interesting and nice how the 113.50 provided support here, reaffirming the level we had noted yesterday. So given that the price action remains rather stable, that would imply a rather sideways movement. But before we go into the direction and what levels could be reached, let's correct first the 113.50, which was a resistance line, and now turn it into a support line in green. Lock this in. Set the new resistance line at 116.20 in red. We're adjusting the levels and the labels. I will. Making a start with the S3, now being placed at 111.65. More correction here. The S2 being placed at 112.50. The S1 being placed at 113.50. The R1 being placed at 114.40. Like this. The R2 being placed at 115.30. And the R3 being placed at 116.20. Locking them in. There you go. Now about the index's direction. Given that the index was unable to break the 114.40 and at the same time found some support at the 113.50. Some may argue that it may be slightly lower. Could be. I'm not denying that. Overall, though, that would be suggesting that the price action may be stabilizing at this spectrum between 114.40 and 113.50. On the other hand, though, we must note that the RSI indicator is still pretty high. It's near the reading of 70. At the same time, the price action has created some space with the upper Bollinger Band, which may imply that there is some room for the bulls to play here. So should we see some, or if you prefer, should we see the bulls taking over and guiding the index higher, we may see the price action breaking the 114.40 and start aiming for the 115.30 as a next possible target. On the other hand, should the bears take over, we may see the price action reversing direction, breaking the 113.50 and starting to aim, if not even test, the 112.50. That would imply practically that it had to drop or touch the 20 moving average. And practically break also the upper upward trend line. Okay, let's have a look at Euro USD. Euro USD, which shows some signs of stabilization, yet the downward trend line seems to continue to guide the pair. On the other hand, we have a failing of the pair to actually mark a new trough, lower trough. Yet the RSI indicator remains pretty close to the reading of 30. It's actually now 33, which is somewhat bearish. So for the time being, we tend to maintain a bearish outlook for Euro USD. And in that case, we may see the price action retreating, breaking the 0.96 and testing the 0.95, as that would be imposed practically to form a lower trough than this one. Let's have a look now at the possibility of a stabilization of the pair, given that the pair has actually been unable to form a lower trough and at the same time seems to be finding some support at the 0.96. At the same time, we had some resistance at the 0.97, so we may see the price action fooling around between the area of the R1 and the S1. And that would imply also breaking of the downward trend line and a signal of a trend reversal. I would be noting also, though, the possibility of a bullish outlook, albeit seems to be improbable for now, in which case we would require a clear breaking of the mentioned downward trend line. Here, aiming of breaking of the 0.97 resistance line so that it gets out of the sideways movement and the price action to start aiming for the 0.9010, which used to be a support line, has now been turned into a resistance line given that the price action has moved below it. Once again, for the time being, we maintain a bearish outlook as long as the price action remains below the downward trend line, and that seems to be reinforced also by the RSI indicator, which is at pretty low levels, implying a rather bearish sentiment on behalf of the market. Let's have a look at Gbp Usd Cable. Now Cable bounced after hitting on the 1.0350, has broken the 1.06, broken at some point the 1.08, yet corrected lower and seems to be currently finding some resistance under 1.08. Now should the stabilization occur, is possible given also that the RSI indicator is still below the reading of 50, yet it's not that close to the reading of 30 as it was before. So there may be some bearish sentiment here, some slight bearish tendencies, yet overall that remains unconvincing. I would maintain a bias for sideways movement for now. Possibly between the 1.08, maybe a little bit higher, and the 1.06. Let's be a little bit more exact here. 1.0840. That's better. 1.0635. The rest stays. So for the time being, we tend to maintain a bias for a sideways movement of the pair, possibly between the 1.0840 resistance line and the 1.0635 support line, most probably remaining within the space here. On the other hand, should there be some bullish tendencies, we may see the price action rising, breaking the 1.0840 and aim, if not even touch, the 1.11, which would be signaling a possible substantial recovery of ground from the ground lost due to the weakening of the pound on Friday. On the other hand, should the bears take over once again, we may see the price action reversing direction. I would require a clear breaking of the S1, 1.0635, for a bearish outlook, and the price action to reach or aim, and actively aim, the 1.0350 support level. Let's have a look now at USD/JPY. USD/JPY, which also seems to be rather stable. Okay, I would be maintaining a bias for a wide sideways movement. Note how the R1 145 and the S2 141.50 maintain the main body of the price action of the pair. That would be since, let's have a look, since the 6th of September. So practically we have a wide sideways movement here, which most probably will be maintained. It's characteristic how the 143.50 serves as a middle level, providing support and resistance multiple times. So that's pretty valid. I would expect the movement to be maintained at that level, especially given that in the latest peak the pair was unable to even not test the 145. It wasn't even able to clearly reach it. Okay, let's have a look now at the possibility of a bullish outlook. It's present, yet note how it's another sign for a sideways movement, even in the short term. See how the price action has broken the upward movement of the past few days? Actually, that should be since Friday. Yeah, since the 3rd. So that's another indication for a sideways movement. Nevertheless, should the bulls take over, once again, we may see the price action rising, breaking the 145, and start aiming for the 147.50. On the other hand, should the bears take over, we may see the price action dropping, breaking the 143.50, and start actively aiming for the 141.50. Let's have a look now at USD/CHF, the other safe haven currency pair. USD/CHF, which has very, very nice behavior. And I'm saying it because at this level, we were able to actually predict the levels it would reach. It did, and it seemed to be both pretty valid. And I'm talking about the R2, which was tested, yet it was able to reverse the upward motion of the pair, the steep upward motion. At the same time, though, we would also highlight that the R1, despite being broken in the upward motion, it has provided some support during today's European session. So with no time to waste, let's turn this into a support line. Green. Note also the extensive resistance it provided at this level here. Let's have a look for a new ultimate resistance level. Note how the 1.0050 provided resistance once and twice here. It's beautiful. Let's drill out to the daily chart. One touch here, second touch here, always in the daily chart, so that seems to be pretty valid. I'm keeping this. That would be the 1 point in red, 1.012. Let's readjust also the labels, drilling back into the 4-hour chart, locking it in, readjusting the label positions. Give me a sec, please. So the final resistance support line is being placed at 0.9620. The first support line is being placed at 0.9765. The first support line now is being placed at 0.9860. First resistance line is being placed at 0.9860, sorry, 0.9960. Note how gallantly practically the level was able to reverse the steep upward motion of the pair. Practically that should be yesterday on Friday. Let's have a look. Yep, that was yesterday. Second support line being placed at 1.0050. And final support line being placed at, sorry, one moment, 1.0120. Small mistake here. So, three elements. A, the upward movement was interrupted. And that's clear. Should we shift the upward trend line like this? On the other hand, some would argue that the shadows have to be included, which is a well-known argument. Hence, this correction lower should be treated as only correction lower, which is also a possibility. For the time being, though, we see that the pair was unable to actually breach the 0.9960. On the other hand, though, also respected the 0.9860 support line. So I would expect the price action to remain between these two levels. On the other hand, given that we have an upward trend line, the bullish bias is also present. Note the RSI indicator, which corrected widely lower below the reading of 50, yet remains above the reading, below the reading of 70, yet remains above the reading of 50, implying that there may still be some bullish tendencies for the pair. Should that be the case, we may see the price action practically rising, breaking the 0.9960, and start aiming for the 1.0050. On the other hand, should the pair stabilize, we may see it remaining between the 0.9960 and the 0.9860. In a possible bearish scenario, I understand it's not probable, but the possibility exists, and we should describe what the intentions may be. We may see USD-CHF breaking the pre-mentioned upward trend line, breaking the 0.9860 support line, and start actively aiming for the 0.9765. AUD-USD, here we go. Now, we maintain a bearish outlook for the Aussie against the US dollar, as long as it remains below the downward trend line drawn. There are some slight signs of stabilization for the pair yet, for the time being, given also that the RSI indicator is running just above the reading of 30 and the RSI indicator below our 4-hour chart. That would imply a continuation of the bearish sentiment on behalf of the market for AUD-USD. I wouldn't be surprised to see it continue, in which case we may see the price action actually clearly breaking the S1 0.6485, which we should now turn into a resistance line, given that the price action has moved slightly below it. Okay. Somewhere here. Let's turn this into green. Daily chart. Liberating the chart. Moving. So, we have a touch here. And I'm keeping it. However, before that, let's shoot to the 4-hour chart. No, unfortunately not. Back out to the daily chart. Yeah, seems to be valid. We're adjusting. 4-hour chart. Let's correct the labels. Okay, the R3 now is being set at 0.6670. The R2 is being placed at 0.6570. The R1 is being placed at 0.6485. The S1 is being placed at 0.64. The S2 is being placed at 0.6270. And the final support line is being placed at 0.6180. Now, should the bearish tendencies continue as we expect, I wouldn't be surprised to see the price action dropping, breaking the 0.64 support line, and start aiming for the 0.6270 on its journey southwards. On the other hand, should a stabilization occur, I wouldn't be surprised to see it being between the 0.6485 and the 0.64 support line. In case of a bullish outlook, we would require a clear breaking of the 0.6485, definitely a breaking of the prementioned downward trend line, and the price action to start aiming, if not even reaching or breaching, the 0.6570 resistance level. Let's have a look at USD CAD. In green. Okay, that's old, but not that old. It's at around a 2-year high. Could be here. We have one touch, second touch here. Could be valid. With the next one being here, the final one upstairs. Okay, let's lock this in. In red, that should be the 1.4175. Drilling back into the 4-hour chart, readjusting the levels, the chart. Oh, that's nice. Have a nice touch of the upward trend line and a confirmation practically of the pair's upward movement. Okay, the new S3 is being placed at 1.3350. The new second support line is being placed at 1.3490. First support line is being placed at 1.3650. First resistance line is being placed at 1.3820. Second support line being placed at 1.40. And final support line being placed at final resistance line being placed at 1.4175. Once again, we tend to maintain our bullish outlook for the pair as long as it remains above the upward trend line, which has intensified its slope to the upward since the 20th of September. This one. Should the pair maintain its bullish tendencies, we may see the price action rising, breaking the 1.3820 and start aiming for the 1.40. On the other hand, should the stabilization occur, given that the RSI indicator is above the reading of 70, which may imply that the pair may be reaching over both levels. Mind you, note how the pair practically corrected lower, reflecting that correction lower also on the RSI indicator's movement. But it remains high. In conjunction with the upward trend line, which remains intact, that leads us to an upward movement bias. Should the pair, though, for any given reason stabilize, I would expect it to remain between the 1.3650 and the 1.3820. A possible break of the mentioned upward trend line would be signaling practically that the upward movement has been interrupted, and the sideways motion in this case may be between the 1.3820 and the 1.3650. On the other hand, should we have bearish sentiment, I would expect the price action to break the pre-mentioned upward trend line, break the 1.3650, and start aiming for the 1.3490. Okay, let's have a look now at gold's price. Gold's price, which continues to drop. It's interesting to note that we have a wide downward motion since the beginning of the year. So we have a downward movement of gold's price. Give me a second, please. Sorry for the technical issues. Okay, first let's correct the S1 and turn it into a resistance line. Let's go hunting for a new ultimate support level. Man, gold has seen two levels since. Oh yeah, that's nice. 2020, for over 2 years. We're placing a resistance line here. Sorry, support line here. And that would be green, the 1585. Adjusting the levels, the charts, drilling back into the forward chart. Let's adjust also the labels. So the new ultimate resistance line is going to be placed at 706. The second resistance line to be placed at 1680. The first resistance line to be placed at 1651. The first support line being placed at 1632. second support line being placed at 1610. And final support line being placed at 1585. Once again, we maintain a bearish outlook for precious metal, which may prove the rise of today's meeting practically being only a correction higher and temporary, and allow the precious metal to dive once again below the 1632. Definitely would require a lower throw than this one, possibly testing the 1610 support line. Let's also draw a downward trend line. Sorry about that. Should on the other hand the pair stabilize, I wouldn't be surprised to see it rising slightly and remaining between the R1 and the S1. In case of a bullish outlook, we would require the price action to rise above the 1651. Definitely a break of the torrential downward trend line would be the first signal of a trend reversal. The next would be the breaking of the 1651 and the price action to start aiming for 1680. Let's have a small look also in US stock markets, Dow Jones practically. Dow Jones, which continues its drop, it's more than evident, practically breaking below the 29,670 support line, now turned to resistance. We may see that the price action has still further room to go lower. The RSI indicator bounced on the reading of 30 and is now currently at the reading of 36. In my opinion, still pretty bearish. On the other hand, though, we see that there is a lowering of volatility and the index seems to be stabilizing between the 29,670 S1, which is now turned to resistance, and this 28,915. Let's lock this in. Let's go hunting. Okay. The index has not seen such low levels. Oh, this is a nice one. Okay, we have touches here, but it's a little bit lower, somewhere here. Yep, and that would be the, in green, 27,400. Drilling back to the forward chart, readjusting the chart, readjusting the support and resistance lines. That should sum it up. So from all of us here at IronFX, best wishes for solid trading.
everyone, my name is Emily, and in this video you will learn about inflation and why it is important in Forex. To start with, we as consumers buy goods or services every day. The people selling those things to us buy stuff from the manufacturers. Inflation refers to the value of this basket of goods in total. In other words, it represents the overall value of those services or goods that there are in a country's economy. We can also say that inflation represents the average price of change of all the goods that exist in an economy as a whole. The basket mentioned above is converted into an index for all countries and is referred to as Consumer Price Index. For example, let's assume that Japan's inflation rate is currently 3%, which is more than last year's. This means that the average price of goods and services in Japan has been increased by 3% in that specific month compared to last year. This also means that the majority of goods has posted an increase in their price. However, if for instance the price of gold has increased by 10% but all the other goods are stable, again we will have an inflation increase. Very high inflation is generally considered a bad thing because as it increases, the purchasing power of people diminishes. Suppose that you needed $500 for all of your everyday household needs last September. If inflation in September of the current year stands at 10%, this means that you will spend $50 more on an average to purchase the same stuff. So indeed, the purchasing power of people is reduced as more money is needed for the same goods and services, leaving you with less savings. However, a little bit of inflation is in fact good for a country's economy. Deflation or declining prices makes businesses less likely to invest in new facilities and machinery, which might lead to an increase in unemployment. Additionally, some households with increased income may find it simpler to pay off debts as a result of inflation. Although as a customer you might not enjoy it, a moderate price increase is a sign of a strong, expanding economy. Historically speaking, at least, salaries often increase at a similar rate with inflation. We hope you enjoyed this video on inflation. Stay tuned for more. Bye-bye!
Hello, can you guys hear me and see me? Welcome to another session with IronFX. My name is Annabelle. Okay. So welcome Posthumous. Welcome Deepesh. Hi Juha. Hi. Welcome. Hello. Nice to see you guys. This is the first few sessions of the Forex Army together with IronFX. This is my first few session. So nice to see you guys. Let me know where you guys are tuning in from in the comment section. So I have another page that is open and I will be answering any of your questions if you do have any. So feel free to just post any comments, any questions while I go through the webinar. So let's give the rest of the attendees a couple more minutes before I start. So today's session will be the third part of the Fibonacci series, which is the Fibonacci Expansion. Hi, Juhaya, you're from Finland. Okay. Peter, why have the markets been ranging? Which markets are you talking about? So maybe this couple of hours might be a bit sensitive because there's a big news coming on tonight, the CPI. Right. GU, maybe we can take a look at that later. So yeah, to answer Juha, you're from Finland. I am tuning in from Singapore. Nice to see you guys. Oh, it sounds like it's raining right here. Okay, just a couple more minutes before we start. Maybe I should start with the risk warning. So our products are traded on margin and carrying a high level of risk, and it's possible to lose all your capital while trading. So FX may not be suitable for everyone, and you should ensure that you understand the risk involved. Disclaimer: the information in this webinar should not be construed as investment advice or an investment recommendation. So please practice your due diligence before you trade. And any material in this webinar is strictly personal opinion of us. The client's investment objective and risk tolerance have not been considered. So yes, please practice your own due diligence. Okay, we have a few more attendees. Hi, Mikhail. Okay, so let's start today's session on Fibonacci expansion. Okay, so the agenda, hang on, give me a sec. Okay, so for today's agenda, it's quite clear. I'll be touching on the third part of the Fibonacci retracement, which is the Fibonacci expansion. So this is quite an important tool because it's where we will catch the reversals, where you can fine-tune your entry or fine-tune your entry levels and probably your take profit or your stop loss. So let me know if you have ever used the Fibonacci expansion. Yep. The agenda today will be, I will cover some parts on the ideal market structure. So it's kind of like a recap on the Fibonacci as a whole, in case some of you guys have never seen it or you have missed the past sessions. Following the trend line, the different retracement levels, Fibonacci, this should be expansion, sorry, and then Fibonacci levels below and above 100%, the live practice. Okay, so this is me, Annabelle. I'm from the Forex Army. As you can see, we are the finalists for Best FX Research 2019, 2020, 2021, as well as finalists for Best Equity Research 2020, 2021. Okay, let's start with the recap. So what is the ideal market structure? So what I mean by ideal market structure is that you need to make sure that there is a trend going on. So let me just draw. Okay, as you can see here, this is an ideal market structure. It's a very nice bullish momentum right here. So you do not want to go to the 15-minute time frame to catch all the small waves because it will be inaccurate. So in any case, if you are using a Fibonacci retracement tool, we would highly recommend to use the 4-hour or the 1-hour chart because it's cleaner in this manner. Yeah. Okay. Okay, so for Fibonacci, to draw an accurate Fibonacci, we try to catch significant, maybe I go to the next slide first. We try to catch significant swings like this, big movements. Okay, because this will make your levels more accurate. we are looking for swing highs and swing lows. So usually these are captured in the higher time frame, meaning the 1 hour or the 4 hours. So what I mean by insignificant swings means probably if you are scalping your trades, you will be looking at 5 minutes, 15 minutes, or half an hour. So these swings are very insignificant because they're very choppy. You do not know where to start your level, where to end, where to draw your levels accurately, because there can be so many levels here. So these are small, choppy, insignificant waves that we do not want. Yeah, please take note. Okay, hi Mabilo, hi. Hi Peter. Hi, welcome to this session where we are talking about Fibonacci expansion. Do let me know if you guys have any questions at any point in time. I will just answer if I have the time. Okay, so following the market structure, okay, while drawing your Fibonacci, you do not want to cut across like this. You do not want to cut across a chart this way, where you have a lot of gaps in between and the price are not close to the trend line. Yeah. So an accurate, maybe let me just show you guys some examples, some live examples. Okay, so in order to draw your Fibonacci, what we do is we will draw, let me go to a higher time frame. You want your trend line, which is this blue line, to connect as close as possible to your price. It shouldn't deviate much. So this is a very clean line that we are looking at, a very clean Fibonacci trend line that we're looking at. Instead of maybe, instead of this. Okay. This might not be as accurate because of this part, which is a bit messy. Okay, so you try to draw as close as possible to your price. See the levels. Let me adjust this here. Okay. Try to be as close as possible to the trend line that you're going to draw for a more accurate Fibonacci retracement tool. Okay, back to, okay, so this is wrong because you can see that the gap is very wide. So this might not be a good Fibonacci trend line that we are looking at. So there are two rules that I always follow. The trend line must follow the price structure clearly, and the trend line can deviate, but not by too much. Okay, so in this example here, this line that they draw is very clean, where the prices are following the trend line. So this is a nice Fibonacci retracement. Okay, so let me refresh your memory on the different Fib retracement levels. So we have previously already learned here. This is the Fibonacci retracement, which is between 0 to 100. Anything that is beyond the 100 will be your extension. So this one we are looking for the Nike tick. This is covered during the previous session. Later I will show you guys how you can find previous session on IronFX website, because these are all recorded. And today we are learning Fibonacci expansion, where it goes below the 0, meaning the negative zone. So these are called expansion. Just to give you some advice and tips, these are called, the whole series are called Fibonacci Retracement. It's just that they are named differently, but these tools are used to find reversal points. So it can help you better fine-tune your entry level or your take profit stop loss levels. Okay, so let's take a look at this chart. Okay, like I've mentioned, okay, the 0 to 100%, these are called retracement levels. Yeah. So if the price reaches here, this is still within the retracement zone. But if price comes here and goes down, this is called the expansion. Alternatively, price could also, let me get my pen, hang on. Okay, price could also come back down here and go all the way up to the 100%, breaks this level and go beyond the 100 to the 127.2 level. So these are called the extension levels. Okay, please take note of these important levels. These are all key levels. Okay, so Fibonacci levels below 100%, and how do we spot the levels, and are they really useful? Let me know in the comment section how many of you guys have actually used the Fibonacci expansion. So in my opinion, actually Fibonacci expansion will not be as useful on its own. Mikhail, I've used the retracement. Okay, that's great. But have you guys used the expansion before? So in my opinion, I feel that expansions are not useful on its own. It's not very effective. It has to be used with all the other retracement tools like your extensions and retracements. So at the end of the four sessions, you guys should know how to use it all together, where we can use the confluence to fine-tune all our entry levels or take profit. Okay. So some examples before I go to the live trading charts. So I have put in some effort to go back in time to find some of the good examples that can simplify what are Fibonacci expansions to help you better understand it. So for Fibonacci expansion, you can see here, I think this is, let me see. This is GU. Okay, so just now someone, Peter, you have mentioned GU. Okay, this one would be GU, but probably in July. So this example you can see here. Okay, for Fibonacci expansion, we are looking for a retracement of at least 50% and above. Yeah, 50% and above. So point number one, we will be looking for a retracement level of more than 50% before we consider that as a strong or effective expansion. So right here, you can see my Fibonacci retracement tool I have drawn from here to here, and then it has already corrected more than 50%. So it's that it has slightly broken my 78.6. So once it has broken or tested anything above 50%, you will look for a reversal. You wait for a reversal to come back. And at this point, then you will take note. So number one, it has to retrace more than 50% and then bounce back to test at your 0% before I will take note of this trade to call it an expansion. So essentially what you are looking for is a flash. Yeah. So for expansion, we are looking for a flash. It can be downward or it can be upward. So long as it expands, it retraces more than 50%. Okay. Retraces more than 50%. 50 to 100, not more than 100. Because if, for example, if it retraces, let me erase first. For example, if your price comes here, retrace more than beyond here, beyond your 100%, this is called an extension already. So your expansion will be invalid. Yeah. Okay. Mikhail, your question, expansion continues the original direction. Yes, it does, meaning to say, okay, so if it's a downward trend, right, it will look like this. It will retrace more than 50%, and then we are looking for it to go back down to the 0% level before it captures your attention to go to the negative 27 before it bounces up. So here is very clean. Later, I will show you guys some of the live examples. Okay, these are the ones that I screenshotted to make it easier and faster for you guys to grasp the basis of it. Yeah. So let me try on another. Okay. Okay, this is another example. So this is also GU. Like I've mentioned, okay, your Fibonacci retracement tool, you draw it. It has to retrace, number one, 50% or more. So in this instance, it has retraced already at the 50% mark. Okay, so we're looking for it to reverse. And in continuation with this trend, meaning I'm looking for this. So anyone can tell me what will happen next if this is Fibonacci expansion? What should we be expecting? Let me know in the comment section. So like I've said, we're looking for the flash. Okay, I have some comments. Yes, it will go in this direction. Let me show you guys. Okay, so just now it came back down to test here, right? And then it goes up to the 0% level, which we are looking for. So the two things we're looking for is for it to retrace more than 50%. And then number second point would be that it touches the 0% level. So at this point in time, when it touches, you should get an alert, or you should take note that if it goes beyond here and touches the minus 27.2% level, it should bounce off. So usually, for my take, how I trade is, at this level, I will wait for it to come to this zone. I will wait for a confirmation that is going upward. Obviously, I will use other tools like my retracement or my extension, my projection and maybe other key levels to make it a more accurate trade. But in general, once it breaks off here, it's time for you to take note. And if it comes to the negative 27.2 level, I will take a short. It can be long as well, depending on how you draw your flash. So it can be this, or it can be a long. So depending on which way you draw your flash. Okay, to answer Mikhail, why would it bounce off there? These are all, so like I've mentioned in the first part of the session, retracement tools are used for projecting forward and for you to note where the prices are going to reverse from. That's why it will bounce off here. So these are all the levels where we are looking at for prices to bounce off. That's why it's called a retracement tool. Okay, I hope I answered that. Okay. Let's try more examples. Okay, so if you guys have any requests, do send in the chat as well, because I have one screen that is catered to answer your requests or your questions. Okay, so this is USD Swiss franc. Let's take a look at this. Okay. So number one, when you are using an expansion tool, make sure you draw your Fibonacci trend line correctly. It can deviate, but not to a huge extent like maybe this. This is too much. Yeah. So we try to make it as clean as possible. This way. Okay. So point number one for an expansion, you need it to retrace at least 50% or more. So this has already reacted 61.8% here. Reacted off and it's coming back. So this should look like a flash like this. So what we are looking for, or what we are projecting forward, is for price to come down here. That's point number two. Point number one, retrace 50% or more. Point number two, test the 0% level. Okay. So once it has tested, you will wait for a confirmation that is still going downward. Okay, this has already broken the key level here. So there's a downward confirmation. You will wait, probably an entry here. Might take profit. You could actually short it, or you can wait for reversal as well. So depending on which one you're more comfortable. Usually, if we are trading, I will go along with the trend. So if it's going in a more bearish manner, I would take a short here and take profit at the minus 27.2 because most likely it will reverse from here. Okay, to answer Mikhail, no, it doesn't always bounce off the minus 27. It could also go to the negative 61.8. So these are the two key levels that we look at. But for purpose of this webinar, I have taken most 27.2%. Yeah, you're welcome. So it's depending on how you chart and how you analyze your charts, because you don't only use the expansion tool. We still need to use extension, projection, retracement. You can use other tools or other indicators like your Ichimoku, your RSI, or your stochastic. So it's not just based on one tool that we make this decision to sell or buy. but these are all examples to help you understand Fibonacci expansion more easily. Huh? Okay, I think this might be the last few examples I have before I go to the live trading view. So right here, can any one of you tell me what we are expecting? I have drawn my Fibonacci trend line here. Okay, it's a bit messy, sorry. Okay, I have drawn my, I use a highlighter. Okay, I have drawn my trend line here. This is a very nice and very clean retracement trend line. Okay, so number one, we are looking for prices to, yes, okay, it's not necessarily 50% only. So it's 50% or more. It could have came here and bounced off this level. It could have came here and bounced off this level. So anything above 50%, not just 50%, take note. So it could bounce off 61.8, or it can even bounce off 100%. So it's depending. So it could come all the way here and then just go up this way. Yeah. But please note that if prices touches the 100% and goes beyond the 100%, is expansion is invalid. Okay, it will become an extension. So anything beyond the 100% is an invalid expansion. Take note. Okay, so yes, to answer Mikhail, yes, we are waiting for it to bounce off the 50% here, or 61.8, or even 100. So it could be any levels, but yes, we are waiting for it to bounce off and goes in the direction of where your trend line was drawn. So you can see here, they bounce off, can bounce off here. Point number 2, must touch. Sorry, my apologies. It's very messy. So point number 2, it has to break this level and then show signal and signs of a bullish momentum upwards. Then you can either buy here or you can short, because technically retracement tools are meant for reversals. So what you can do is also to short here, take profit. Usually I would just do it here because you will never know what happens after. Moreover, it's a very bullish trend. Yeah. What if it bounces off 38 or 23? Is that still good? Okay. If it bounces off, okay, let me draw it for you. Okay, let's say if, good question. So the reason why I keep emphasizing on the fact that it has to reverse off 50% or more, because if it just bounces off your 23.6% and goes this way, it will just look like it's in a bullish continuation. It's just making a higher low and in a continuation of this trend. For example, here, so come up, this is probably at 23%, and then it continues with a bullish momentum. So usually we don't treat it as an effective level at 23.6 and 38.2 because and also the fact that we have done quite a bit of testing. So it usually is most effective after 50%. Yeah. Okay, so let me go to the live charts to show you some examples. Okay. Let me find a good example for you guys. Okay, we can try this. Let's try maybe US. If there are any requests, please send in. I can do it. Oh, shoot. Sorry, this one is slightly messy. Give me some time to load the charts. Okay, let's take a look at this. Okay. So let's try to use a Fibonacci expansion here. We'll try to spot some in the live trading view. So let's try. Okay, for expansion, remember you are always looking for a flash, meaning to say, okay, maybe I draw using a pen. So we are looking for a flash, okay, which is something like this. Okay. Let's see if there are any here. Okay, so this is quite a good example. Okay, just now, Mikael, you asked whether bouncing off the 28, the 23 or the 38 will be a good gauge. Here I'm telling you that it will not be quite a good gauge because usually it should react at the 50% or more. Yeah, so you can you guys see? Okay, this is a very good example that just happened a couple hours ago. Okay, price retraced 50%, and then it bounces off here. Tested my 0% here, breaks and come to the 27.2, negative 27.2. And then you see my take profit. So usually people will do it. They will take a trade here or slightly below. And then the take profit should be at this level. Stop loss can be slightly above. Okay, this is how we usually use retracement tool to place our entry level, our stop loss, our take profit. So it helps you to fine tune it together with other tools. Yeah. Okay, so aside this, maybe I try to use all the tools together to show you what a confluence is like. Okay. So I'll usually draw a retracement first. Okay, you can see that it's reacting off the 61.8. So I will just leave. Where's my tool? Oh. Okay, I will leave the 61 because it's kind of testing here and it's rejecting. Okay, no news. Okay, what I'm trying to do here is I'm trying to give you a good example of a confluence where we use the Fibonacci expansion extension to fine tune where you should enter your positions. Okay, just give me a second while I find. Okay, so now price is right here at this 134.95 level. What I can do is, okay, it's kind of ranging, so it's very hard to predict what might happen, and especially if there is a big news coming tonight. So maybe this is not a very good example. We can do a back test. Okay. If you guys have any requests, please send in. I can see on my on my screen on the left. Okay. Okay, maybe we try USDJPY, then I will go to gold. Okay, no, this, okay, so maybe I'll give you an example of the extension. So you can see here, as you can see here, this is what we call an extension. So for example, if we do a, let's chop off. Yeah, so for example, if market is in this manner, yeah, I'm doing a back testing to show you some examples. Okay, so let's say if market is somewhere here now, what I would do is I would draw the retracement levels to see. Okay, so number 0.1, you want it to retrace more than 50% fulfilled because it has already broken the 78.6. I will wait for it to test here. Okay, so if it okay, as you can see here, it's already broken the 100%. So this is what we call the extension. So this tool will bounce off the 127.2 level because for Fibonacci retracement, they are reversal tools. So here, I would then try to see whether, okay, wait, number one is already broken, so you can't see whether there's a flash because once it's broken, the 100% is invalid already. So this is called an extension. But what you can do is, let's try doing this. So it retraces. If, see, so in this, okay, maybe I draw a cleaner line. So from here to here, we can see that it has sort of tested the 50% and rebound and bounce off this level. It doesn't have to always touch accurately. Sometimes if it's close enough, you can try to do the Fibonacci expansion. So what we are looking for here is this. And we have also a bullish confirmation here. This way. So I'm looking to see if there is a continuation. Okay, so my point number 2 would be once it's tested the 0% here, then I will keep a lookout for price to come here and reverse. It is not the 100% guarantee that it will always happen, but this is what the tool is for. So you will monitor. Okay, it looks like it didn't break this level, so this is not a valid expansion. Yeah. Okay. So what do you normally do? We have a question here. What do you normally do during the year, the end of the year when the markets are ranging? To answer that question, if markets are ranging, sometimes it also shows volatility, which is good for traders. But if you are not confident using the tools, or if you feel that it's too volatile, sitting out is an option as well, because being neutral is good instead of having to trade when you are uncertain. Yeah. Okay, when it breaks 100%, it's an extension or expansion. Okay, so when it breaks, let me clear this up. When it breaks a, let me see whether this is a good example. Okay. Let me just refresh this. Let me find a better. Okay, here. I think this is quite a good example. Okay. Okay, never mind. I'll explain from here. Okay, when 0 to 100 is your normal retracement where we look for prices. Yeah, let me just chop off. Okay, where we look for prices to bounce off these levels. So this is your typical normal retracement levels in between 0 to 100. Okay, so if price is already here, we are looking for a reversal here, the 38.2. If it doesn't, okay, maybe you can look at reversal at 23.6 or so these are all reversal points for you to take note. Okay, so if price doesn't break any of these levels and it goes below 0, it becomes negative. This is your expansion. Do note that expansion and extension doesn't mean it's in a certain direction. It's depending on how you draw your Fibonacci retracement. Okay, so just take note of the numbers. If it's between 0 to 100 is your retracement. Anything below is called expansion in the negative zone. Anything that is beyond 100, which is above 100, is called extension. So take note that it has nothing to do with which direction it is at. For example, if it's negative, it doesn't mean it's here. If it's more than 100, it doesn't mean it's here. So it's depending on how you draw your Fibonacci trend line. Yeah. And to answer your question, which time frame is best for this? I would usually look at H4, H1, or even on a daily chart. So usually personally what I do is I will take a look at the daily chart to see where is the market sentiment going. So it's currently, I'll use a normal retracement tool to draw. Anyway, for expansion, you also use the normal retracement tool. All these are drawn by using the retracement tool. So it's just how you read the numbers. So I would use a day to see where the market is generally going. So it's still in a bullish manner for USD JPY. Then I will zoom in. So here I also can see that maybe there is a potential for a expansion, but technically it's not that great because it's 23.6%. But if you zoom in, maybe you could have drawn here to here. Okay, kind of tested the 50%, didn't break. Yeah. Let's see where it goes moving forward. See whether this works. Just be patient with me while we try this. Oops. Is it? Okay, anyway, I'll use another. I'll just do XAU gold USD. Before I run out of time, I'll do a quick one on this. Anyway, yes, to answer your question, 1 hour, 4 hour is the best for Fibonacci. Okay, so here. Okay, right away, I am looking at this is quite a nice move. This, okay, remember, it always has to be significant. So we are looking at significant movement here, this way. Yeah. So my chart would be something like this. It has already tested the 78.6. I'm looking for it to maybe touch here, bounce off, and then wait for it to test. Okay, this is slightly far, but this is technically what an expansion does. So I'm looking for it to test this level. If it breaks, then I'm looking to short here because this is the Fibonacci extension. Okay, it's at the 127.2%. So I'm looking, if it breaks here, I'm looking for a short here to come off. If it doesn't, and it becomes to test here, I will look for it to break this level first before I go to my Fibonacci expansion here, touches here, short it. Okay, but if you want me to do, okay, I don't think I have the time, but in general, this is what we're looking for the expansion. Okay, maybe I do a simpler one. Give me a sec. Okay, I'm at the 1 hour time frame. Okay, so what we're looking at is, remember the flash, right? So this looks like a nice flash right here, significant movement. Okay, we can try to look out for the, yeah. So here you can see that price has reacted off more than 50%. That's what we look for. Price has reacted, come off here, reacted off, and go in the same direction as where you draw your level Fibonacci. So right here, I'm looking for this price to maybe touch the negative 27.2 before it comes down. Yeah. Okay. So let me just show you guys where you can find the past webinars and this session. So you can come to the IronFX platform, go to past webinars, and then it should be here, where you can find all the previous webinar and rewatch it if you miss any of the parts. And also, recently, IronFX and the Forex Army, we have a special exclusive VIP trading room where we show our clients market forecast, and you guys can actually ask questions. On this platform. So it's a very exclusive and personal page where there's a one-to-one interaction. I can show you guys. Okay, so you just come here. This is an example of how the page will look like. I'll give it a second. Okay, so when you join us on this exclusive page, you can see all day. You'll be able to see all the relevant FX news. Can just click in and see. And then we have a interact section where you can come to the chart. You can use the tools, for example, USD/JPY. Okay, so I actually use it here. See, I'm able to let my clients know what are my thoughts for USD/JPY or any other majors. So I can highlight key levels, just as you guys can as well. If you have any questions, you can just type key levels and then you highlight it. You can just draw any line you want and then it will link it. So when you hover over that point, I'm able to see which line you are exactly talking about, and then we can comment. So this is the interactive section where we will be able to answer you individually. So we have Jean, he's our professional prop trader in this industry for more than 10 years. Very experienced, as well as Desmond himself, our CEO. So join us. If you guys are interested, log on to IronFX. Let me just cut the link for you. Okay, go to IronFX. I'll cut the link for you for easy access. Okay, we have you here. So these are the levels. You have a bronze. Give me a sec. Okay. Cut and paste. So this is where you register. Okay, so for to access the premium service, we have bronze, silver, gold, platinum, and diamond, depending on how much you have in your account. So for diamond 30,000 and above, you can direct message any of the traders and ask questions directly. Priority support, weekly private 30-minute group call where we analyze and discuss charts. And you can also DM our chief trader. So it's depending on what needs or what you require, and then you can sign up accordingly. So we hope that you guys can join us. Please register. Okay, so I have come to the end of the session today. I hope you guys have learned as much as I do. I will see you guys in the next session. Thank you for tuning in. Thank you.
Hello, my name is Christina. Most of the trades you open will not run into profits immediately. They will require some time to work. This can take 2 days, or it can take a week or even a month. You have to be able to give the trade a chance to work. Give it some time, but don't be delusional. Which brings us to the next point. Cut your losses short. If you delay closing a losing trade, it could cost you double or triple in the next days. If a trade doesn't work, it's okay. Close it and move on. Losing trades can drain you emotionally and physically. So when something isn't working, let it go and move to the next trade. Finally, I would recommend you trade when you're in a good mood. Being positive and optimistic is important for your trading performance. If you feel moody or angry, stay out until you feel relaxed. The right attitude makes a difference. Thank you for watching.